Are you interested in investing in private hard money mortgage loans and want to know approximately how much you can earn? In this video, I'm going to explain the typical returns investors earn by investing in private mortgages and how to find companies that offer investment opportunities. I'm Butani, CEO of PrivateLenderLink.com, where investors and brokers can easily find direct private hard money lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, be sure to subscribe to our channel and click the bell icon to be notified whenever we release a new video. A private mortgage is a non-bank loan secured by real property. It's one way to invest in real estate without owning or managing the property. Some of the common terms you may hear to describe these loans include private money loan, hard money loan, or bridge loan. There are two main methods of investing in mortgages. The first method is to invest directly into a loan where you or your entity is named on the promissory note. In some states, this is called a trust deed, or in other states, it's called a note or just mortgage investing. The second method is to invest in a fund along with many other investors, and a fund manager makes all the decisions on behalf of the investors as to which loans to fund. A fund is a security, so in order to invest in them, you have to be an accredited investor. I'll make separate videos to cover each of these two investment methods in detail. For this video, I want to focus on the yield that can be earned from both methods. Now, before we continue, I want to quickly clarify the terminology for the three main parties involved. When I say investor, I'm referring to the mortgage investor or capital provider, not the property investor. The property investor in private mortgage transactions is the borrower. And when I say lender, I'm referring to the loan originator, not the mortgage investor that provides the capital for the loan. The originator is the private lending company or mortgage broker that deals with the borrower to underwrite and process the loan, and it's the party that's offering the investment opportunity. So here are the yield numbers. The typical returns I see offered by private mortgage investments in the United States ranges from 6% to 12% annually. It could be higher. I've heard of some investors earning up to 18%. But that's typically for very risky loans with very high leverage or some sort of equity participation structure or profit sharing. On the low end, I haven't heard of any companies offering less than 6% per annum for any private mortgage investment. Now that could change in the future, but it's not likely in my opinion. There are several factors that could determine the yield that investors earn from investing in private mortgages. The primary factor is the interest rate that the borrower is charged. In private hard money lending, the interest rates range from 7% to 15%. And this too varies based on several factors, including the loan type, property type, loan to value, loan term, lien position, and much more. If I had to state an average for private mortgages throughout the United States, I'd say it's 9.5% at the time of this recording in 2021. When I first started out in the private lending business in 2010, I would have said the average back then was 11%. So it hasn't changed a whole lot. There's just more capital and more lenders in the market now. In general, an investor's yield will vary based on the risk profile of the loan, but this is not always the case. Sometimes it depends on what part of the country the property is located in. California private lending rates tend to be lower than the rest of the country, but that mainly applies when the property is in a major metropolitan area. A borrower may be able to get lower rates if the property is in Silicon Valley versus a smaller market like Fresno. Now that doesn't mean the interest rate is always going to be lower for deals in the larger metro area. It could be higher if there's additional risk to the loan, say a second mortgage versus a first mortgage, or if the collateral is a vacant lot versus a fully occupied multifamily building. There's no set standard for pricing in private lending. If a lender can convince a borrower to pay 11% for a loan that most other lenders would charge 9%, well, that's great for the lender and the investor of that particular loan. In many cases, the interest rate that the borrower pays is not the rate of return that the investor earns. When investing in the mortgage note or trust deed, many loan originators will take a yield spread of the note rate. For example, if the borrower is paying 10% and the mortgage investor gets 8%, the other 2% is likely going to the loan originator. This is also called a servicing spread. Servicing includes the collection of payments and sending notices to the borrower. It's typically handled by a third-party servicing company, but some lenders service their loans in-house. Now, not all loan originators will take a spread. There are many that just charge an origination fee to the borrower, and the investor gets the entire interest payment. Before you invest in a mortgage note or trust deed investment, you should receive a summary of the loan request, and the lender will tell you what interest rate is realistic or what they've already negotiated with the borrower. Now, let's switch gears to the mortgage fund side. When you invest in a mortgage fund, the note rate is almost never the rate of return. There are always expenses the fund investors will incur. The biggest one is the management fee. Most fund managers charge 1 to 2%. Other expenses may include an annual audit by an accounting firm and legal services. Most fund managers have a separate entity that originates the loans, and that separate entity will likely pay for a lot of the operating costs. Before you invest in a mortgage fund, you should receive reports or an annual audit to show what the fund returned to its investors in the previous year. Or if it's a new fund, you should be provided with the target yield that the fund manager expects to pay out to their investors. If you're looking to invest in private mortgages, use our website privatelenderlink.com as a resource. We have a directory of companies that offer private mortgage investment opportunities throughout the United States. There is no fee to search and no registration required. When you get to the homepage, click Investments in the main menu bar. We have separate pages for mortgage trust deeds and mortgage funds, so select the one that you're interested in to see the list. We offer the ability to filter by property region, target annual return, minimum investment amount, and much more. Click on each company's profile to learn about their investment offering, and scroll to the bottom of the page to find their phone number and a short form to send them an email inquiry. Now, just to clarify, I am not an investment advisor, and I do not endorse any of the investments listed on our website. Each investor must conduct their own due diligence and evaluate the offering prior to investing. The companies listed pay us a monthly or annual advertising fee, not a commission on the investment amount. Also, there's no set placement for the investment section of our website. The investment search results are randomized and should change whenever you select a filter or reload your browser. Now, we do offer top placement opportunities in the lender searches of our site, but that's for loan origination targeting borrowers and brokers, not mortgage investors. If you found this video to be helpful, please click the like button, and be sure to check out our other videos about private mortgage investing. Thanks for watching, and see you in the next video.